Today we are talking about NRE and NRO accounts, but not in the boring, here's what's written in Google kind of way. We are talking about the real scenarios we are facing in UAE, the tax implication nobody explains properly, and the actual way you fit both into your banking world. If you get NRE versus NRO wrong, you're potentially looking at your money getting stuck, excess taxes paid, or a ton of unnecessary paperwork, or worse. Hello, fellow Arbab. It's time to boss your money again. Are you or were you, like me, super confused about the whole NRO NRE situation? I remember when I first started working in UAE, I went to open an NRI account and they asked me, "Sir, NRE or NRO?" And I was like, I know it's confusing at first, but really not complicated once you understand what these accounts are actually for. Let me start with what these accounts actually are, because the names don't help at all. NRE stands for Non-Resident External Account. NRO stands for Non-Resident Ordinary. Helpful, right? About as clear as the life insurance fine prints we talked about last week. Here's what they actually mean. NRE account is the foreign money account. This is for money you earn outside India. Your Dubai salary, your Abu Dhabi bonus, your freelance income from Singapore. It's foreign earned money that you're bringing into India. Think of it as the NRI cash highway. Money goes in from abroad, money can come back out to abroad. No questions asked, no traffic lights. The NRO account is the Indian money account. This is for money that is earned inside India. Rental income from your Mumbai flat, dividends from your Indian stocks, the sale of your RX 100 or that land your grandfather left you in India. It's India's source income sitting in an Indian account for an NRI. Now here's where it gets interesting and expensive if you get it wrong. The biggest difference: taxation and repatriation. Interest earned in NRE accounts are completely tax-free in India. Zero. Why? Because this is foreign earned money flowing into India, which actually benefits the Indian economy. Taxing it would be like killing the goose that laid the golden egg. India wants NRIs to bring foreign currency home, so they sweeten the deal. Bring your dollars and dirhams in, and we won't tax the interest. Plus, and this is huge, you can repatriate the entire amount back to the UAE or anywhere else you want. Principal, interests, profits, all of it. Much simpler than with NRO accounts. And income credited into NRO accounts, fully taxable in India at your applicable income tax slab. But wait, it gets more complicated. The bank will deduct TDS on almost all income earned in your NRO account. If your earnings within India is 4 lakhs or higher, you'll have to pay income tax on your income based on your slab rate. You'll have to do the necessary paperwork, file your tax returns to claim a refund if the TDS was higher than your slab rate. And here's the kicker about repatriation from NRO accounts. You can only take out $1 million per financial year for accumulated balance on capital income. That's things like sale of your house or shares. Current income like rent can be repatriated without that cap, but you need CA certification, Form 15CA, 15CB filing, and proof of taxes paid. So yes, technically possible, but the paperwork is, let's just say you will become familiar with your CA. Now, for most of us, that $1 million sounds like plenty. But if you just sold that 15 crore property your grandparents left you and you're planning to move that wealth to UAE, that cap becomes very real very fast. Not the end of the world for most people, but just something you understand and keep in mind. Let me show you what this means in real numbers. Let's say you have 50 lakh rupees sitting in a NRO fixed deposit at 7% interest. The annual interest would be 3.5 lakh rupees. The TDS deducted on that would be 1 lakh 5,000 rupees. Now that's 30%, and 30% TDS applies to interest income. Different TDS rates apply for different income types, but the principle is the same for this example. Your actual tax, if you're in the 20% bracket, would be 70,000 rupees. That means the amount stuck with the tax department until you file for this refund is 35,000 rupees for that year. This is money you can be investing and compounding. That single 35,000 rupees turns into 6.7 lakhs if invested at 12% for 25 years. Multiply that confusion by 5 to 10 years and you see why people get frustrated. Now, I'm not the greatest at Indian tax laws and all their forms, but I'm pretty sure they have something called Form 13 that you can apply for if you're expecting your taxable income in India to stay below a certain level for the year. It basically tells your bank not to deduct TDS or to deduct it at a lower rate. Lucky number 13 coming in clutch. If something I just said was please let me know in the comments. Meanwhile, the same money in an NRE account, tax-free interest, no TDS, no returns to file for this income. All right, enough theory and let's talk about your actual situations. Scenario 1, the monthly salary transfer. You're working in Dubai earning 25,000 dirhams a month. Your parents are in India, you're supporting them with 50,000 rupees monthly, and you want to build up some savings in India for someday when I go back, which we all say but never actually do. But that's another video. The right move is NRE savings account, and you can add a NRE fixed deposit if you want. Why? You're earning this money in the UAE. It should flow through NRE. The interest compounds tax-free, and when you eventually need it, whether in 2 years or 20, it comes back to Dubai with zero complications. But also, you can withdraw the funds and use it within India. Scenario 2, rental income. You bought a flat in Pune in 2015. Smart move. It's appreciated nicely. Now you're getting 35,000 rupees monthly from rent. Where does it go? The only move is that it goes to the NRO account. This is India sourced income. It must go into NRO. Now, I've not done this part, but I'm pretty sure you can set up automatic sweeps from NRO to NRE account. Wait, what? Yes, you can transfer your rental income from NRO to NRE, but you need to pay the tax first. Once tax is paid on that rental income, you can move it to NRE and then it enjoys tax-free growth from there. But again, I'm pretty sure there's quite a bit of paperwork to be done for this. Scenario 3, you're 45, been in Dubai for 15 years, accumulated 400,000 in gratuity and end of service benefits. You're moving back to India next year. Where does this money go? The tempting but wrong move is keep it in UAE and transfer it to India when needed. The smarter move is move it to NRE, park it in high interest FDs now. Why? Because once you become a resident Indian again, you can't open or maintain NRE accounts. You've got a window right now where this money can earn tax-free returns. Indian banks are offering around 7% per annum on NRE FDs and it's tax-free. Miss this window and that same money becomes taxable the moment you're resident. Or you could invest it through IBKR, link below. Scenario 4, 10-year FD. Let's say you put in 5 lakhs in a 10-year FD in your NRE account. The interest is accumulating, meaning interest is not paid quarterly or annually, but paid at maturity of the FD after that 10 years. Interest on it is tax-free. But in year 8, your status changes from NRI to resident. What happens to the tax on that interest? Don't worry, even though it was not paid during your first 8 years, you earned it during that non-resident years. So you'll still only be taxed on the interest you earned after your status changed to resident. Let me tell you about the mistakes I've seen and made putting Dubai salary into an NRO account. Why do people do this? Usually because they opened an NRO account first and they never bothered opening an NRE. The cost, you're paying tax on interest that should be tax-free. Over 10 years, this is substantial money. Mistake 2 is not considering repatriation timing. Selling property in India, putting the 10 crore rupees in NRO, then realizing you can only take out $1 million per year. The cost is that your money is stuck. You're paying tax on interest while you wait to move it out. What you should be doing is planning your repatriation before you sell. Sometimes it makes sense to sell property while you're still an NRI. Route through NRE with proper documentation and avoid the cap altogether. Here's one nobody talks about. You maintain your NRE account, keep it active, but you spend 185 days in India 1 year for a family emergency, or let's say a year or two to work on your MBA. The problem is you potentially become a resident Indian for tax purposes. Your NRE account should technically be converted to a resident account. If you don't do this and the bank finds out later, frozen account, tax notices, paperwork nightmares, it's endless. So track your India stays. If you're pushing 180 plus days, be proactive about your account status. Mistake 4. Adding a resident Indian as a joint account holder in your NRE account. Seems helpful, right? They can access money if needed. The problem is, this can jeopardize the NRI status of the account and create tax complications. If this is something you're seriously considering, I would recommend you talk to a professional at the bank or a CA. Mistake 5 is that you continue to retain your NRE or NRO accounts when you return to India. The moment you become a resident Indian again, you must inform your bank and have NRE accounts converted to resident accounts, or you can just close them. And likewise for NRO accounts, you have to get them converted to resident savings accounts. Here's how to actually decide where is this money coming from. Outside India goes to NRE. Inside India goes to NRO. Question 2. Do I need to bring the money back to UAE? If your answer is yes, definitely prefer NRE. Maybe someday still prefer NRE. No, it's staying in India, then NRO is fine. Question 3. How important is tax-free growth? Very important. Then you route it through NRE wherever legally possible. If it's less important, NRO works fine. Most Dubai NRIs should have both accounts. It's not an either or decision. Use NRE as your primary account for Dubai earned money. Use NRO for your receiving money for India sourced income. Transfer from NRO to NRE after paying taxes to optimize growth. Look, NRE versus NRO isn't complicated once you understand the fundamentals. The tax benefits of NRE accounts are too significant to ignore. The compliance requirements of NRO accounts are too important to mess up. But here's what I really want you to take away. This isn't just about accounts. It's about building a financial structure that works across borders. You're living in the UAE, you have ties to India, and your money needs to flow efficiently between both worlds. You may be stuck in Dubai traffic, but don't let your money also get stuck. Get these accounts right, and you're building wealth tax efficiently. Get them wrong, and you're volunteering to pay more tax than you need to. Or worse, getting caught for doing something you shouldn't have, even if it was a genuine mistake. Yalla Arbab. Now go boss your money.